Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES tested key support near yesterday's low and found responsive buyers active at that area. At this point, heading into the open, we're going to be using 62 to 64 quarter as the initial support zone. And we can see that it is a larger time frame support area. And at this point, if we can hold above initial support and ideally off the open hold above 67.5, then that would indicate that the buyers are stepping in here. A breakout above 71.75 to 72.75 would confirm that idea. And above 71.75 to 72.75, we have the prior close and VPOC at 75.5 to 75.75, and the top of yesterday's balance at 77.75 to 79.75. So holding above the pre-market resistance would bring the gap and the initial resistance zone into play. And given that we are running on above average volume and we can see a decent range on the day time frame, holding above the prior VPOC and testing initial resistance can actually lead to a move up to the 85 quarter naked VPOC, 85 gap, and the 85.75 to 88 quarter resistance zone. So then this becomes a extended upside target, which is a very achievable target on the day time frame today. Now, bigger picture, we know that we are simply trading within a large balance area. And for that reason, we've had to be very flexible with our intraday bias. We can't be overly bullish or overly bearish in this type of market where, for the most part, the markets are range bound and trading within a balance. Overnight, we saw that, ES, NQ, and the Russell across the board, we saw tests of key support, and buyers jumped in and were active across the board in these markets. So, for example, looking at the Russell, we have a key high volume node around the 1245 level, which held overnight, and Russell is actually indicating strength and holding up much better than the S&P. So if Russell is any indication, then we should be seeing some higher prices today. But that does require that we hold 67.5, and then we actually get a break above the 71.75 to 72.75 pre-market resistance. And that is the expectation. But if off the open we start seeing selling below pre-market resistance on very weak internals, then we have to be careful. Now, given that we don't have any major economic catalyst pending today, and we have the FOMC announcement tomorrow, it's unlikely that we're going to get a strong trend type move today. Now, we can still get a directional morning where, if the market's holding above 71.75 to 72.75, we can go up and test the initial resistance zone quite easily. But even 85 to 88 can actually get tested. And then the market can start balancing yet again, and sellers can be active at the 85.75 to 88 quarter resistance zone. But it's unlikely that we're going to get a trend day where the market simply heads in one direction throughout the entire session, right? So it starts at the lows and ends at the highs, or starts at the highs and ends at the lows. That is pretty unlikely. So in the event of some weakness off the open, and let's say we don't hold the 62 to 64 quarter initial support zone, buyers can still be active at the support zones below at 55 to 57, 53 half, and especially 49.75 to 51.75. That is a larger time frame key support zone. So even if the market breaks 62, we don't necessarily have to trend down from there. Of course, we can still get short-term liquidation, but it doesn't have to sustain. We can still come back up because the primary catalyst at this point is actually tomorrow. And, unless it's a news-driven move with a lot of momentum, most likely it's not going to sustain to the downside or the upside. So, most likely we are going to get more of a two-sided market even today. Now, there can still be, some directional skew behind it early in the morning. We know that the upside target, the extended objective, is around that 85 to 88 area. And, on the downside, we know the market has already tested multiple times, the key support around 62 to 64. So we can certainly go up there, but beyond that, it becomes risky to continue expecting sustained upside movement. So, that 85, 75 to 88 quarter area is a spot where responsive sellers can be active on first test. And, from there, we can again start balancing and establish a two-sided range heading into tomorrow's FOMC announcement. So those are the main ideas heading into the open. Again, the larger time frame bias is very neutral because we are simply trading in a wide range, and we do have to lean more on the intraday signals and kind of see what type of broad market strength or weakness we're seeing and base our decisions off of that, while still utilizing the key support resistance zones. So, the larger time frame bias is very neutral. Short-term bias right now is relatively bullish, but we do need to see a break above 71.75 to 72.75 in order to confirm that idea. And then, the first inflection point is 77.75 to 79.75, and then beyond that, 85 to 88 has potential to get tested on the day time frame, especially if the market continues running on above average volume. So those are our main thoughts heading into the open. Let's see if the buy side can hold up the market here, and we'll take it from there.